Good evening, everyone. Welcome aboard to the GAR Capital YouTube channel. My name is Carlos Garcia. I'm the founder and CEO of GAR Capital. It is Monday, September 2nd, 2024. It is Labor Day. The market is closed for the day, obviously. We didn't do a morning note on Monday, meaning today. So we're here getting ready for the week. A short one indeed, but glad to have you on board. This is also simulcast on our podcast. I didn't do a a podcast on Friday because I was kind of shuffling around trying to figure out what would be a good subject to talk about. But then I figured it was a long weekend. I want everyone to enjoy it. I think the last thing anyone wanted to talk about on Friday was really financial markets heading into the 3-day weekend, especially with such a crazy August. So we got a bunch to go over today. And let's go ahead and not waste any time and get started. Before we begin, if you're watching on YouTube, scrolling on the bottom is the information to access what's in front of you, which is the live market blog on our Discord server. We would love to have you on board. It is free. Uh, that will always be free, as well as the YouTube channel, as well as the podcast. So even if you're not a paid subscriber, we still love to have you on board because it is just a great community to have. The information will always be free. So again, thanks always for the support. Dow futures this evening down 54 points. The Nasdaq's up about 33. The S&P did tag about, I think it was about 6-week highs. 56.63 up about 2 points. The Russell's down about 0.13% in this evening's trade, meaning Asia sessions trade. Crude oil up about 0.15%. Again, nothing really standing out. Gasoline is down 1.5%, which is not a bad thing, obviously, if you drive a car. So with that being said, let's go ahead and break it down. Let's go over some headlines over the weekend first. Well, I went ahead and we had some earnings posted, our earnings that are coming up this week. As you know, we're kind of getting to the tail end of it. You know, we already went through the mega caps and all that. So here we go. The thing that stands out here in terms of, I guess, anyone's going to be really talking about is probably Broadcom. Broadcom being a semiconductor, that's going to be on Thursday. That might affect NVIDIA, that might affect AMD and the other semiconductors that everyone trades. But other than that, that's pretty much the only one that stands out to me that's going to maybe move other stocks. Everything else, I don't see that's going to be too important to what we're trying to do in terms of options trading. Economic data this week. We got ISM manufacturing PMIs, ISM manufacturing prices. We know those are surveys. We got JOLTS job numbers on Wednesday. So this is going to be a very jobs centric week. Inflation, guys, that's pretty much over with. And that's probably the CPIs from now on are not going to move markets. We've been saying that for weeks. It's all about jobs, jobs, jobs. And the key thing here is if the jobs number, meaning people that are employed, fall fast enough or slow fast enough, will that affect the trajectory of the rate cuts that are expected? So inflation be damned. We're done with that. That's 2022, 2023. We're now in 2024. It's all about jobs. So we know the Fed's going to cut. The key is, will the jobs openings or lack of jobs, for example, or a job slowdown make the Fed cut rates faster? If the job market is still strong, the Fed might just go slowly and gradually, which would be nice. That would be considered a soft landing uh, definition, actually. So if you are a bullish person, in a sense, like you want low rates and you're that kind of trader, you want a bad job. You want a bad jobs number. Absolutely. If you're someone that cares about the economy and you want a strong economy, the stock market be damned in terms of short-term moves, then you want strong jobs numbers. You want people employed, obviously. This is a consumer economy. It's all about the consumer and what they spend, and people who are not employed are not going to spend. So it's always very important to have people working. On Thursday, we have the ADP private payroll number. Unemployment claims, again, that's always going to be key for every week. We got some final services PMI and ISM services PMI, another survey. On Friday is the big one, the non-farm payroll report. That is the first Friday of every month. And that'll be at 8:30 in the morning with the unemployment rate. And then we got a couple of Fed speakers. That is the last time they speak. So we're going to get a blackout. Blackout period begins on Friday, September 6th. So the week after, Monday 9th until the Friday the 13th, the week after this one, you're not going to have any Federal Reserve speakers kind of messing with the market. And that's always a good thing. I know that sounds kind of weird, but the less is more kind of speak. So that week, I assume things will be better. But in terms of this week, since I expect so much uh, focus on jobs, something that really no one can really control, because even those numbers that are reported in terms of jobs can be revised, as we just saw. Could that affect the market? Could it not? So it's going to be really focused on headlines. And September, seasonally speaking, guys, is weak. So when we go over a couple of names here, I'm going to have scenarios for both. There's a couple of names that I'm bearish on, and there's a couple of things that I'm bullish on. We're getting in that point. September and October, guys, are weak. So might have to put the bear hats on, even though the S&P looks like it's going to break out at this point. Again, we're just preparing ourselves for the inevitability. We saw what happened in August with that flash pullback, let's call it, in terms of that yen carry trade. I don't know if that's going to happen here, but again, we are expecting a rate cut in September. Could that be the sell the news event, right? Buy the rumor, sell the news. Again, we have a lot of time until then, but the jobs information that we're going to have this week, guys, is so crucial. So crucial. It's going to reverberate to the market. I don't know exactly what the number is going to be, but again, that's going to be the key. Not inflation anymore. That's done with. And then next week, we don't have any Fed speakers. The week after that, it's all Fed. It's Powell on that Wednesday, the 18th. So these upcoming weeks, just be careful. Maybe if anything changes, maybe lighten those position sizes. Maybe go half position, because it might get a little choppy and weird. It got choppy just in the last week as well. So with that being said, we got that. Some other news here. Tesla shipped 86,697 Model 3s and Model Ys in August in China, up 3% year over year. That's still behind BYD, just to give everyone just kind of clarity. BYD, Build Your Own Dreams, is the Chinese company over there. They're the number one EV company in China. Tesla is popular over there, but not as much as that one. So up 3% is a good thing. Let's see if Tesla is in a positive pre-market tomorrow or in the open. Let's see, about 94. Oh, excuse me, that's regarding electric car registrations in Norway. Did you know that the S&P is tracking for its second best year since 1998? That's pretty great, and especially in an election year. The S&P was the only other times the S&P was up more than 19.5% through August, which we are currently, was 1991, 1995, 1997, 2021. All great years. 95, 97 was the beginning or in the middle of the tech boom. 1991 was post Cold War ending. 2021, post pandemic. We're at 19% at this point last year. So in terms of the S&P, so really, really good stuff. Again, it's not like we're not set for a pullback either. Again, September and October are seasonally weak. So again, we want to keep that in mind moving forward. All right, let's take a look at how we did this month. It wasn't great, that's for sure. 12 out of 22, 55% in terms of win-loss. One of the tougher months that we had, but not the worst. I want to go quickly in terms of how it's been in terms of the year, so we have some context. But in terms of August, again, not the best. It was very, very up and down, as we know. The second week of August, we had a tank job. The third week of August, we had a sword job. So just back and forth. And think about 3 of those trades were carryovers from July, unfortunately. So having the longer expiry did hurt. August, again, 55%. Last month in July, we were 85% win loss, 11 out of 13. June was 48%. That was actually the worst month that we had, which was 7 out of 16. May was great. We had 10 out of 11 in trading. April was 15 out of 18. That was 83%. And March being our best month that we had of the year, 100% win loss, pretty much perfect trading. I'm hoping that we can get back to those kind of results in September. But just to give some context, again, the last time that we had, a subpar terms of a month, we bounced back pretty well with July from June. June was 48%, actually the worst one of the year, and yet we bounced back in July, 85% win loss. February we were 69%, and then March we had a record month. So it seems that we have maybe a tough go here and there. We may trip up a little bit with chop and everything, but we tend to come back better. I think that's just kind of a response to how life is. You have these bumps along the road. I'm not exactly proud of the results. It's a tough one to see. I'm just glad that August is over, to be quite honest. And we just want to move on, and we want to stick with the good habits. And right now, in terms of September, guys, I just want to kind of really give the caution to people because we might get a pullback. It might get choppy. Again, September and October are seasonally the worst months. We are going to get a rate cut. So again, that may change the balance. But again, just be patient. That's going to be the real key this month is be patient. We don't have to trade everything in terms of options. Luckily, we still have a way to get a little bit of exposure in the market, which is futures. Futures in August, we were up 12%. So our month was 43%. That's great. Total trades, 8. We did very, very well. Couple of break evens. I think that's what's been helping us out in terms of futures. That's up 43%. Excellent job, Nick and the team. And you could see in terms of futures trading how much more control we have. We can move stops to break even, and we have liquidity overnight because it trades 24/5 in a sense, 23/5 actually. But with that being said, it's just in a way to navigate this kind of volatility. We do like futures to trade. Doesn't mean we don't like trading options, obviously, but in a sense that it gives us an alternative way to get exposure to the market. So it's good to be well rounded. A lot of our traders do like the future side because it gives them that alternative. So, thank you for futures department for picking up the slack versus the options department. First round is on the options division because futures is really helping the cause out here. So well done to the team. Just want to give a shout out to that great team. Futures video is also up. Nick is way ahead of me in terms of excitement of the market. I'm just looking to see what we got moving forward. All right, so let's kind of go over now and pivot to what I'm watching, what I'm looking for in terms of stocks. So I'm going to start with 3 names that I would be bearish on, or I'm looking for weakness. I'm going to go ahead and start with Microsoft. Now, again, if you're looking at this or listening to this on the podcast, it's going to be tough to kind of make sense. But when you get home or you're looking at the office, you could see exactly what I'm talking about. You bring up the daily chart on Microsoft. This is what I see in an actual head and shoulders setup. And we have an upward channel. The key here is, does it hold above 400? So 400 is going to be my support until if we break that. And again, it might happen quickly. The last time I talked about these 2 names, Microsoft and Google, was right at 468 on Microsoft, and we pulled back within that channel. If you guys remember, I just didn't see any volume out there. Put to volume ratios are getting extremely depressed. There's a lot of people who are bullish. And again, I am too. But again, with September and October being weak, we want to prepare ourselves for any inevitability. In August, I talked about Microsoft and Google again, like I reiterated, but there was no volume. Doesn't mean that we can't see the opportunities there. Again, head and shoulders setup below 400 on Microsoft. I got 385 as my next target. That's what I'm looking for on Microsoft. And again, it's just technical analysis right now. It's just trend. Again, when we don't have much news out there, again, they already reported earnings. We don't have the rate cut yet. We need the jobs number. This is the eventuality that we're trading on. Google below 160, 157. I'm looking at possibly the 157, 158 puts, and we have a possible downside target to 152. The last time we traded Google was back in, or talked about puts, was back when it broke below 177, and I didn't see volume then either. It's a tough one on options, but again, Google and Microsoft, I'm looking for additional weakness there. There's an opportunity. If a pullback does occur, we're going to play puts on that. The next one, and this one's a really tough one, is GLD, gold. If we break below 226.03, then we got more downside to 213. But if it breaks above 234.07, it's a breakout. It's trading right now at 231.53. Let me give you my thesis on gold. And again, we talked about the dollar over and over, right? Anything that denominated in the dollar in terms of commodities, if the dollar comes down with rate cuts, we're going to get a push higher in commodities, gold included. So with that being said, why am I saying gold is a possible put? The dollar index. I have been talking about the dollar ad nauseum since the beginning of the year. If you want to check out that recap video or the preview of 2024, it is on our YouTube channel. I talked about the 3-pronged strategy: lower inflation, lower dollar. Very, very important. It was lower dollar, lower inflation, and what was it? Lower inflation, lower dollar. Was it just the 2? And lower rates, excuse me. Lower rates, lower dollar, lower inflation. It took a while. So we were targeting 100 on the dollar. That was the key, the $100, 100 point level, let's just call it, on the dollar index. If we expand to the weekly, we bounced pretty much exactly at the 200-week moving average at 100.29. That is very concerning because that is the bottom end of a range that we've had from December of last year, July of last year, April of last year, and January of last year, and we never broke. And what do we talk about? If the dollar bounces, commodities are going to be affected and stocks are going to be affected. Crypto is going to be affected. I expect crypto to have pullbacks as well. The dollar is setting up for a bounce. So that tells me we're going to fall a little more. So again, I have gold as a put, I have Microsoft and Google. Those are the concerns in terms of why we could get that pullback. It's really on this guy, the greenback, the dollar. If we break above 102.02, then we're going to get that acceleration to the downside in terms of stocks. If we break below 100.29, let's assume they do the rate cut in September. Let's assume 50 basis points. Oh, yeah, that dollar's breaking down. And then you look at Forex, that's where you look at commodities, where things may get a little easier because now we have a downside path. But bouncing off the 200-week moving average is not something that makes me happy on the dollar. So I think that reverberates through the market where we can see some opportunities like a Microsoft and a Google and a GLD to play puts. But there is always another side. If if the dollar does hold firm, let's say it doesn't spike, it just holds around that. TQQ, look at the hourly downward trend, possible breakout above it, above 70.34, you target 73 to 74. That's if we get the push in tech. But Carlos, what if you're short Microsoft and Google? These are just scenarios, in my opinion, based on the dollar. If the dollar gains strength, if it gets above 102, yeah, TQQ is going to fall. So again, we're just kind of preparing ourselves for eventualities or probabilities, and that's really it. If we take a look at Tesla, we had an alert here above 220.86. We had some of the headlines from China. There's still a gap to fill at 236.52. As long as you are above this trend line or above this channel here, I think we're okay with Tesla to fill that at least to that 236 gap. We still got one more at 288, but that's a whole different story. We'll see if we get there. But of course, for every opportunity that we get a bounce or any opportunity we get a pull back, we're ready for each event, for any scenario. That's the key. And then there's one more stock that I have talked about for a while, I think a couple of weeks now, is Caterpillar. And Caterpillar has yet to break 360. I'm waiting for that break. If we can get it, I'm looking for 380 calls or at least a little less than that. I don't think 380 would be available for calls. Short term would be best. Maybe the 370s if Caterpillar breaks out. This would be a play on rotation where, we're getting out of tech and more into industrials. Caterpillar would be the one. The only other one I thought about was the banks, and there's really only two that really stand out. GPM, all-time highs. Goldman Sachs, near all-time highs. We had Citibank puts. That just chopped us up. So that was just waiting around, and it just didn't get us anywhere since we got chopped all last week. If we take a look at the S&P 500, just based the last 5 days, a whole lot of nothing. Back and forth, back and forth, back and forth. I had SPY calls, if you guys remember, the 565s. Of course, we got to the top end, nearing it, 564.20 on the last day of the week. If I would have bought a little more time, maybe we would have caught this if we get this push higher. But if the dollar does bounce, guys, that is so important. If the dollar bounces, all of this is going to be pulled back. And then this is going to give us an opportunity to short. But for now, in terms of SPY, let's just call it for what it is. You can see SPY is literally flat. 555. That's your support. And then your resistance is right around 565 anyway. So you got a $10 really much chop fest. I don't think I want to see myself getting into SPY again. I think we probably just better serve trading ES, S&P 500 futures at the moment. So at least August is over, but there's a couple of names again that I'm watching. IWM, I still like for more upside above 221.32. Obviously, lower interest rates does help IWM. To me, it's still small cap summer. That hasn't changed. But in terms of the mega cap tech names, the Magnificent Seven, they have been pulling back a little bit. And that's a good thing. We want to see that it's not as concentrated in this market, because the more concentrated the market is on a couple of names, the less sustainable that is. We need this to expand. We need industrials. We need other, consumer staples, for example, or discretionary. We need other sectors to rise with it. Home builders are doing great, industrials are doing great, financials are doing great. We need that. We still need more of that. So that sustains. NASDAQ is back to green at this point now. So really the focus this week, again, short week, no need to press anything in terms of, trying to get something done same day or same week. Again, people may not be back from vacations, for example. So again, really the jobs number on Friday is going to be the big flashpoint. And then the other thing that's going to be key is positioning ourselves for any kind of scenario. So if we get puts, you have an alert ready to go. If we start pulling back and we start breaking out, you have an alert for the upside if we do. So it's a tough one because we have a bearish scenario, we have a bullish scenario. Really depends on your adventure, and we'll see what the jobs number gives us. All right. Well, I think that's pretty much it for the weekend. Short week ahead of us. I hope everyone had a great one, enjoyed themselves, and I will catch you guys on the Discord server, tomorrow's YouTube as well at 9 a.m. Eastern Standard Time. Happy New Week. Hope everyone was relaxed and rested. Let's make it happen this week. Let's make it happen this September. It's redemption time. We'll see you tomorrow. Cheers all.